If you're still paying attention to crypto at this point, you will make it. In today's video, I'll be touching on some developments in the tariff war, especially between the US and China. I'll also go over the recent Bitcoin price action, taking a look at the key levels that I am willing to trade. And at the end of this video, I will show you that you are part of the 1% that is still paying attention to crypto. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. So let's kick us off with Bitcoin. Not much has changed. We are still chopping around this range, and I did say that it would be a relatively illiquid time because yesterday was Good Friday, the market was closed, and so Bitcoin just kind of chops around. It's very easy for market makers to shake you out, especially when not a lot of people are currently trading. So right now we can see that Bitcoin essentially established this range over here, which is between around $83,000 to give or take 86.5K. So it wouldn't surprise me if we make it up here and chop around a little bit, but ultimately, as we've been talking about on the channel, I think that there is a strong possibility that we can make it up to potentially 87.5K, and this would likely be the area that we see significant resistance for Bitcoin if stocks are not responding well. This is going to be a very interesting week for stocks because we can see that on the weekly chart here, the S&P 500 did indeed close red after we got this nice little relief rally in the prior week. So the question is, can we just continue on higher and pump? Or was this just a relief rally and we're likely going to form at the bare minimum a double bottom before stocks can potentially get a longer time frame rally? I'm on the fence about this because there's still so much uncertainty with the tariffs, and that's why, as you know, my base case is that regardless of how long Bitcoin chops around here, we will likely resort lower. It's only a matter of when could that actually happen? Because my question to you is, can you handle this? Over here on this longer time frame Bitcoin chart, you can see that I drew out the previous range from last year, which was, if you didn't know, from the beginning of the range to the end before we broke out, just over 200 days of slightly bearish but sideways price action for Bitcoin. Would you be able to handle this before a breakout? That is usually what happens in the crypto space. It isn't just up only. When we do go up, we go up very aggressively, but it does require a lot of consolidation beforehand. So just to give you some perspective here, let's say for argument's sake that we are about to establish a new range for Bitcoin, and that range can last throughout summer. Would you be able to handle price action like this over 200 days of sideways action for Bitcoin? We saw that in this previous range from last year, there were indeed a couple of deviations. I grabbed the wicks, but what we can see here is that we popped down below. This was an aggressive move below $50,000. And then we saw a couple of them breaking the highs here around $70,000. So if Bitcoin were to continue like this, would this be something you can handle? Now, you know my base case. If we break below this previous high, which was established in 2024, I would consider the cycle to be over. But we have seen historically that Bitcoin can drop a ton before bouncing and putting in a new all-time high. And from the top, just to remind you, all the way to the bottom of this channel, we only dropped just under 32%. Historically, in bull markets, Bitcoin can drop up to 50%, although that isn't likely, but 30 to 35% drops are well within the realms of possibility before we're able to go ahead and move higher. I just want to remind you of this because it will require a lot of patience. I personally don't think that we will just pop out of here and immediately set a new all-time high like a lot of other bullish crypto influencers are saying. But I do think that if you continue to be patient and you continue to tune into these videos, you will make it in the crypto space, because these kinds of ranges are when most people tune out of the crypto space and they end up joining when we already pumped significantly. So if we go back to the daily chart, I think we can see some more consolidation for Bitcoin. I'm not going to be the one to tell you that we're for sure going to go up or for sure going to go down. And I know I've been seeing a lot of heated comments, especially on other people's YouTube channels saying, look, he's saying it's going to go up or down. Guys, the reality is no one can predict this market with absolute certainty. The only thing we can do is react to the price action and, when possible, position ourselves before the next big move. You know my base case. I talked about in my previous video how this range could likely roll over, similar to what we saw previously at this recent resistance level. But we'll have to see how this plays out. It's a Saturday as I'm recording this video, April 19th, and I will remind you, if you are tuning into the crypto space and you're still watching these videos, despite the interest being at an all-time low, you will make it in the space. And that reminds me, if you want a reliable place to trade Bitcoin, make sure to click the first link in my description down below. It brings you directly to Weeks where you can earn insane bonuses just for trading crypto as you normally would. You get a 20% deposit reward, which means that, for example, if you deposit $1,000 into your account, you get $200 back for free for trading purposes. And this is the same case all the way up to $2,000. So in the short term, what am I looking at? Well, we can see that there's some liquidity building up to the top of this range, right around $86,000, but there's also some building down towards the bottom of this range. It's going to be a very rangy market, in my opinion, and we're not likely to see a big move for a while. I will, of course, make sure to keep you updated as soon as things change, but for now, on the 24-hour liquidation heat map, it looks pretty balanced. Now, if I zoom out and look at the weekly time frame here, we can see that there's starting to be a little bit more liquidity built to the upside, which is certainly something you'd like to see if you're currently longing Bitcoin. But the key thing that we need to pay attention to is the overall Bitcoin exchange liquidation map. This tells us a much longer time frame story. And what I mean by this is that we can see here that the cumulative short liquidation leverage is right around 9.5 billion. But if we go on this side of the chart, we can see that the cumulative long liquidation leverage is right around 8.7 billion, which means that both longs and shorts are relatively even. So in my opinion, it's certainly not the best environment to make huge bets on this market because both are even. Usually when we see this happen, it does mean that both sides of the equation get liquidated before Bitcoin makes its next huge move. This is why I've been saying I think we will be ranging around, and we'll have to see how the price action of Bitcoin develops. You know that previously I did talk about altcoins on this channel and how they would continue to struggle against Bitcoin. Bitcoin dominance continuing to put in new all-time highs this cycle. And I will transition into altcoins when the time comes, but it's really a matter of monetary policy. So there's no point in me talking about specific altcoins right now, except for Ethereum, if you even consider Ethereum an altcoin. We can see that Trader PA put this out saying, "You're stupid for not buying ETH here. I'm targeting 5 to 6K end of year." And yes, we are at the bottom of its range as we discussed on the channel, but I wouldn't just get overly bullish because we are there. Prices can trend lower, especially if the Fed doesn't pivot, and especially if stock markets trend lower because it affects crypto in that manner. Overall, though, as I have been saying on the channel, if you do have a longer term outlook, I still think that Ethereum is a very solid play for the long term. And so I have already started dollar cost averaging below $1,600, as low as so far below $1,400. I do think it's possible that we head lower, but no one can time the market perfectly, which is why you want to adopt a solid dollar cost averaging strategy if you believe in Ethereum. You can do so also on Weeks with the first link in my description. But in terms of actual trading, I have mainly just been trading shitcoins, as you know, shorting them as I discussed on the channel before, and also Bitcoin because it's the easiest price action to trade. And another quick note on ETH, we can see that there are some whales that continue to accumulate at these levels. There is a whale that bought 46,577 Ethereum worth $100 million over the past 2 months, and this guy just continues to accumulate. Guys, a lot of these whales tend to be right in the long term, which is why you should have a dollar cost averaging strategy. I wouldn't just be short-term speculating on ETH because it is a risky game to play. And right before I show you what the interest in the space is currently looking like, I just wanted to quickly go over the tariff developments. So as we can see here, Trump actually came out and said, "We have had nice conversations going with China. It's really very good." Whatever that means. And you can see that he's still complaining about Powell. If Powell knew what he was doing, rates would come down. But this is certainly positive for the talks with China. We'll have to see how things materialize. The only thing with Trump now is that he's very much been flip-flopping. A lot of people are saying that this is all part of his master plan, but we'll have to see if the markets can actually handle that. Because even if we have a bunch of positive stuff coming out of the tariffs, I don't think that the market will just easily reverse to all-time highs. I'm happy to be proven wrong because I have a strong spot position, but ultimately, I think that this will take a few months to cool off. And the last thing that I want to show you in this video is social risk. This is why I say, if you're paying attention to the space right now, you will make it, because as we can see, there is literally no one here. Now, the social risk measures the overall growth of the crypto space across social media for Twitter analysts, for exchanges, for layer ones, and for, of course, crypto influencers. And what we can see here is this red line, which represents the social risk. Now, if I zoom in, we can see that we are literally at all-time lows. The social risk is basically sitting at zero, which means that all of these exchanges and all of these crypto thought leaders and layer ones are not growing in the space. And this usually tells us how close retail is to coming back. Usually when we start popping off like this, retail is well on their way back into the space, and all of these social media accounts are growing significantly. And it also happens to coincide with our famous altcoin season. When social risk is at all-time highs, it's actually usually a good indicator to exit your altcoins, because that is when we see an imminent crash. We can see that this cycle so far, the social risk hasn't even made it all the way up to 0.5, and this is likely to do with monetary policy, as we've been discussing on the channel. As soon as the Fed starts expanding their balance sheet and heads into quantitative easing, which, as I've said, could be a few months, that is when we're likely to see some more speculative capital enter the space, and also social risk continuing to climb. But until then, right now, there's basically no one here, which is why I'd like to congratulate you for still tuning into these videos and paying attention to what's happening with our industry. That sums up today's quick video. Trump is hopefully entering some solid negotiations with China. We'll have to see how that develops, but overall, Bitcoin is still very much rangy after the red weekly close for the stock market. If you enjoyed the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.